we have with us, she'll also highlight two stocks which she spotted on the charts for us. It's a combination, Srishti. What is it? Because of course the market is not giving very clear direction right now.
Well, certainly. So two counters on the breakout side is what we have spotted, because a lot of action was from the broader market space. One such stock is Chambal Fertilizers, though the whole agrochemical space was buzzing away. But Chambal Fertilizers look really interesting on the charts. Why so? Because for today, you will see that the stock finally managed to break above its key resistance of 540 odd levels. Though the stock has been in the up move for the past 3 to 4 days, but you will see that every time it used to face a resistance around these levels, but the stock was also consolidating in a very tight range. And key to note is that whenever a stock actually consolidates for a long time, makes a range for itself and then breakouts, then that confidence is even more. And for that, we have spotted Chambal Fertilizers, wherein for today, after already having a stellar move, there was indeed long build up seen on the derivative side. So this is the first stock on the breakout side. Moving on to the next one then, and on the charts, the next stock that we wish to highlight is also from the broader market space, though we are just waiting to get the other chart, but that's from the IT space, and that is Coforge, because for now you will see that it's sort of a similar type of a consolidation is what we have witnessed in Coforge, because from the IT space, the stock was seen to be consolidating in a very tight range for the past 2 weeks. You will see that the stock has absolutely done nothing, but it did end the day at the highest point and has been taking a support at its key moving averages, and yet again after the consolidation it did take a bounce from its 20-day moving average, and hence the breakout. So these are the two stocks on the breakout side. Back to you guys.
Alright, and a couple of breakout counters are the ones that made it to Srishti's radar today. But moving on then, let's get to the word from the wise. Speaking of Capex, Vijay Raghavan Swaminathan, Executive Director, Equity Research at Avendus Spark Institutional Equities, says that the best of government Capex growth is largely behind us and the private Capex theme is yet to play out. Listen in to what he had to say there.
If you look at the last 6 months, what we have been recommending is the government is clearly very particular about consolidating their fiscal deficit targets. So as a result, both central government capex and state government capex, incremental growth is going to moderate. This is pretty much our thesis pretty much at the start of the year. But that will get balanced out by combination of private capex recovery. So what we are effectively trying to say is the best of the government capex growth is largely behind us, whereas the best of the private capex is still not played out in our assessment, especially from the large sectors like power, metals, semiconductors kind of sectors are meaningfully participate in a private sector capex recovery.
So private capex theme is clearly playing out. That's what the big market voice is coming out like. Now move on. As we move on into a new month, let's take a stock of how market have fared out in the month of October over the last 10 years. Indices, stock and sectors, a comprehensive analysis. Let's take it across to Ashish Shah, who will put things into perspective for us. Ashish Shah, over to you.
October, in fact, is the month which has shown strongest seasonality over the last 10 years. First up, let's talk about individual sectors and how they've performed. Nifty has given an average return of about 1.7% over the last 10 years. We have Nifty Mid Cap Index, average return of 2.1%, and Nifty Bank Index. In fact, this has bucked the trend with an average return of about 3.9% over the last 10 years. Nifty ended in the green in 8 out of the last 10 years. Nifty Mid Cap 9 times, and Nifty Banking Index has ended in the green 9 out of the last 10 times. Let's also talk about individual sectors and how they've performed. PSU Banking Index is bucking the trend with an average return of 7.3%, followed by private banks, 3.7% average returns. We have financials, auto and real estate with average return anywhere between 2.7 to 3.5% in the month of October. Only 2 sectoral indices have ended, or rather have given an average negative return. FMCG Index, which has given a negative return of 0.5%, IT Index, which has given an average negative return of about 0.3%. Let's also talk about individual stocks, and we've picked up 5 stocks which have closed in the green at least 8 out of the last 10 times. We have Canara Bank, average return of about 13%, Delta Corp and TVS Motor, average return of 10%, ICICI Bank and NMDC have given an average return of about 8% over the last 10 years. Let's also talk about the losers then. We have picked up 3 stocks which have closed in the red in at least 7 times out of the last 10 years. Vodafone Idea, average negative return of 6%. Followed by Astral and Biocon, which have given negative return of 3%. But yes, October has proved to be the strongest month when it comes to seasonality, and index returns have also been quite decent.
Alright, then there you have it. So that was a comprehensive take coming in on October seasonality. Time for a very quick breather on the show. When we come back, we'll take a look at the big story of the day, so don't go anywhere. Welcome back. Thank you so much for staying tuned into your trades. And as promised, we'll of course be going to the big story of the day in a bit. But let's take a look at the derivatives roundup and see how that is shaping up. When you take a look at the September expiry, when you take a look at the trend then for Nifty, you're looking at a largely flat trend coming in for the Nifty. But when you take a look at the Bank Nifty as well, there's some mild short build-up that was also observed. Let's also take a quick check on what the India VIX was up to, because it was around those 12 levels. And what you did see is that it did crack about 6.2%, and that's the kind of move that you saw coming in on the India VIX as well. Let's also take a look at active call levels for 3rd October expiry. Then when you take a look at call writing, that was observed at 25,800 as well as 25,900, and it was interestingly the 25,900 level that was also forming a strong resistance level. So that was what the active calls pictures looks like. But when you take a look at the active puts as well, put writing was also observed at 25,700 as well as 25,600. So at this point, this is how the derivatives roundup is shaping up like.
Alright, so seems like not much damage done. Lower strikes have not been gone into writing much. Similar trend what we saw yesterday also. But then yes, of course, we are spending some time here. Moving on, RBI has observed several irregular practices by gold financiers and now asked them to review their policies and also undertake a portfolio review. My colleague Varun joins in with all the details on this. Varun.
So in the past, we have seen RBI is actually closely monitoring the gold loan companies and the loan given by these companies, and now RBI has come out with several observations where they say that there are irregular practices in gold against pledge of gold ornaments and jewelries, and there are shortcomings in use of third parties for sourcing and an appraisal of gold loans. Also, there are irregularities in undertaking valuation of gold without the presence of customers. There are issues with due diligence, lack of end-use monitoring of gold loans, and also loan-to-value ratio and incorrect application of risk weight. So, these are some of the issues which RBI has highlighted on gold financing companies. But brokerages have a different view. They say that this would definitely lead to some slowdown in gold loan. That is expected because of the strict action or the observations by RBI. But they think that the entities with lesser vintage in lending against gold jewelry could likely have more deficiencies, and companies like Muthoot and Manappuram, which have been regulated by RBI for many years, they are likely to be positioned better. There might be some risk and there might be overhang on the stock because of this news, but they still are comfortable with these companies, and between the two, they think that Manappuram would have a good safety of margin of safety. Jeffries say that the traditional gold loan financiers like Muthoot and Manappuram Finance, they have been audited by RBI periodically and they have very fewer gaps. Also, when it comes to IIFL Finance, they say that it should be unaffected because they have already taken corrective measures. So, the listed gold loan companies, no doubt they would have an overhang, but most of them are good, highly regulated by RBI, and there are periodic checks which have been done. So, if there are issues, there might be with the entities which have lesser vintage in lending against gold, but yes, there would be overhang on all the gold financiers, at least for today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits and then break right through them. Become something more. It's my time to rise.